Welcome to Market Insight for the week of March 18th through the 22nd, 2024. So, as we know, our monthly continues in its uptrend trajectory, but it is positioned overbought in the uptrend channel. And that's been operating since the past 15 or 16 months, since October. The lows were put in October 20. So we note too that we're only halfway through the month, so this is all to be taken with a grain of salt, but we're currently trading a little bit narrower range than we have been, and we are trading off of the highs, okay? So not much more to say about the monthly. Let's take a look at the weekly. So we note on the weekly, the poor closes over the last 2 weeks. Last week and the week before, both closed pretty poorly. And actually the week before that didn't do such a hot job either. But let's just focus on these last couple of weeks. Both close off of the highs and in the middle of their bars, and they both do so on increased volume. Now, if all that volume represented strong buying, right? If buyers were really present and really strong in there, we would see closes up here, wouldn't we? Right? Something like this. We'd see firmer closes. We'd see the market pushing up, similar to what we saw back in here. Right? Market is closing firm on all of its bars. That's what we would expect to see on bigger volume, right? And in fact, it's larger volume than what we saw over in this area on the rise where it was rising firm. So this, as I say, if all that volume represented strong buying, then the bars would be closing firm and prices would be pushing higher, just like we saw in the earlier weeks of this move up. So note the differences. These are important. Let me erase this so we can see here. The heavier volume and poor closes reflect an effort, right, to go higher, to bring prices higher, an effort to rally prices up. But the results show something different, don't they? Right? Something else is going on here. Prices didn't go higher. The buyers were, frustrated, I guess we would say, because the results were poor. They weren't on the highs. They weren't firm closes. And the most likely explanation for this is that selling has entered the market. It's really the only explanation that comes into play here. And so we see selling and some potentially large selling coming in on the weekly. Let's take a look at the daily and see what this might all mean for us in the coming week here. So the daily reacted after overshooting its reverse usage trend line. That's the dashed trend line in here, right? We were looking at different trend lines in here, and the trends had changed a bit, throwing everything a little off kilter. So there's normal usage trend lines in red here, and then the reverse usage trend line in the dashed. And so it was in this area, if you recall from last week, we were looking in this area as a potential, when we were talking about this down here, we were looking at this area as a potential spot for resistance, and indeed that's where that came in. So we rejected highs after overshooting the reverse usage trend line, and then we came down into support area. Roughly, it's this 5160 area. I think Friday's low was 5167, a little higher than this. And then this high in here is 5157. So there's a little bit of difference, but basically we're in support here. So the market can do a number of things from this point. It can rally higher, can start to head down with some alacrity, or what we might see this week, kind of what I'm anticipating, but it's, as I say, this is not quite a fantasy, but a projection. So it may or may not come true. We don't know. But if things do start to unfold this way, then I'd be thinking about more downside coming into play. And that is that the daily goes into a little bit of congestion action here. We may trade, say, between, let me get a pen here, between the recent highs up in here, right? We may not even get all the way up to the highs, maybe somewhat lower than the highs. And then this 5160 area. So we may see a couple of days up, day down or so, and then we start heading down. So assuming that we're going to head down, I'm making that assumption. That's a presumption here. So let me just rephrase all of that, because I've said a lot of words there. So let me erase here first. So in other words, with our eye to the weekly chart, right? And we can just go back to that quickly. We're seeing the beginnings of potentially the beginnings of supply coming in here with a high volume and the effort to go up, right? But it doesn't, I don't see real supply. It doesn't look to me as if this thing is ready to crack at this point. So if that's the case, then, and if the weekly is going to head down, so we may see a little more congestion on the daily as the larger players create some preparation for more than just a brief pullback down into this area. We might be going down lower, right? So if this is true, we may see the daily have some congestion between the highs here and this 50-60 area, give or take, before heading lower, assuming it does head lower. I'll circle back on this in a minute, and we'll look more detail at where resistance and support lies for the coming week. But before we do that, I want to just touch on the major markets. And we can see that they're all showing, all three markets are showing weakness. We've got the S&Ps up above, the Dow in the middle, and the NASDAQ on the bottom. Now, the Dow had been the strongest, or has been the strongest of the three, but it entered an upthrust into an upthrust position, and then has re-entered the trading range. So that's weakness, right? The NASDAQ has been the weakest, and it could hardly rally over the top of recent resistance. And instead, it has an upthrust, and it came right in, back immediately right into the trading range. And then the S&Ps are overbought in the trend line, off of the reverse use of trend line here. And we've re-entered into the trend channel. If we were to draw that in here, it would look like this. So all of these markets are showing weakness with, I guess, the and they're all, with the NASDAQ as the weakest, and they're all indicating lower prices ahead, right, coming up, if they're unable to overcome these recent highs. And so this would suggest that the Dow would head down towards resistance, right, down towards the 38,500 level, right? The S&Ps would head down towards the 50, 60, 50, 50 level in here that we were just talking about on the daily chart. And the NAS would certainly come down to this level and most likely break this and start heading down towards 1720 area, give or take. So we can see that weakness, right, in all of these, but it wouldn't be a surprise to see a day or two kind of rally back up and test highs before heading down, if we are going to head down. So let's turn back to the daily and sort of scope that out and kind of prepare ourselves for the coming week. So back on the daily here, and this is a little bit of a blown up version of the larger chart so that we can see things. On Monday especially, watch for potential resistance to show up roughly where I've got this blue line in here. This is about the 52, 15 to maybe 20 level here. I think the low is on this day is 51.17. So we may go just slightly higher than that. But this is a pocket area. I know that there's a gap on this, and I know some of the standard continuation charts look different than this, but this is a more accurate version. In any event, there's a little pocket area up in here formed by this 3-day low. So watch for that, especially on Monday. If that breaks, then obviously we'd be looking maybe for a test of the old highs around 52.50, 52.53 and a half. Now, so that would be resistance to the upside. And if this analysis is completely wrong and off base and we rally up, then I'm not sure, I would guess then the next level up is we'd be heading towards 5,300. But I really do think that we're going to head down before that. So where would support hold? Well, around 50.60 here, 51.60, 51.57. This is support. And if we're, and so we may see this hold and rally up early in the week, but if we're expecting the weekly to be heading down, and we'll likely break this level and then head down towards our level here at 50.60, the next key level of support. So that's what I see. Maybe resistance forming in here, possibly up into the highs here. I really doubt going up higher, but it's anything in the market is possible. We have to watch the price action and the volume around the highs to determine that. Support around 51 area, 51.60 area. And then assuming that breaks at some point next week, then we'll look to see us heading down towards and maybe even hit 50.60. If it really gets going, I suppose then the next level down, we'd be headed down towards 4,900 area, 49.30, 36 area there. In any event, I'd be focusing on this area in here and then this area in here for next week. So let me erase so we can see what we've got here. So for next week, Monday, let me give you a heads up for Monday, we'll have a membership monthly meeting. Yeah, try saying that 3 times fast. So we'll have that monthly meeting on Monday after the close at 4:30 p.m. Eastern time. And I think what I'm going to do, I know what I'm going to do. I'm going to start us in on going through in detail the 1930-31 case study of the New York Times average of 50 stocks that Wyckoff did back in the 1930s. It's David always said to me that this was the most profound thing he had ever read on how to trade the markets, and I fully agree with that. So we will spend the next several sessions, I don't know how many it will take, maybe 3, 4, somewhere in there. We'll spend the next several sessions, however long it takes, going through all of that case study. And I'll send you some materials on that. I'll send you some materials on that. I probably won't do it in advance. Well, maybe I'll do that. Yeah, I'll try to send it out this weekend. And then we'll also do deep practice on Thursday at our normal time on the 21st. Enough words from me. Have a great rest of the weekend. Terrific trading week next week. I'll see you Monday and Thursday. Everyone, take care. Bye-bye.